Hello everybody, this is Lara with your daily update for Bitcoin, Ethereum and XRP. They're all moving lower today, Bitcoin a little bit more than the others. On the daily chart, it looks like Bitcoin is now coming down for a back test of support of this trend line. And I've drawn it from this high here on the 13th of July across these highs of the 8th and 9th of August. This trend channel in red contains all of this downward movement to the low on 11th of September. As price approached the trend line here on the 28th of September, it found some resistance, a breakthrough, a back test of support, a little bit of a bounce, and now a deeper back test of support. Yesterday I said I expected resistance at 27,004, what was support at 27,400 to hold, and I said assume it holds until it gives way, and if it gives way, next support below is 24,800. I don't think it's going to get that low though, because this trend line so far today is offering support. So this is a pretty typical behavior from price. When it tests a trend line, breaks through, curves around and comes back to test support. These tests of support don't always get right down to the line though. Quite often they fall short, but today it's right down at that line. And I keep saying don't expect price to move in a straight line. It won't do that. I had considered this was possibly a pennant pattern. I had a question mark over that, and I had adjusted the trend lines yesterday. I've removed that because the pennant pattern has failed. Pennant and flag patterns are reliable continuation patterns, but as I keep saying, none of this is 100% certain. Pennants and flags don't always work. If there was anything in technical or fundamental analysis that worked 100% of the time, we would all be multi-billionaires, but we're not, because that's not how any of this works. If you're concerned about this strong pullback today for Bitcoin, this lower move from price, it's probably because you're day trading. If you are not a very experienced trader indeed, then you should not be day trading a market with volatility is absolutely insane as any cryptocurrency. Learn to trade in something much calmer with lower volatility like the euro or any other normal currency rather than a commodity or particularly a cryptocurrency. There are far too many people who are trying to learn to day trade cryptocurrencies who should not be trading at all. You will wipe out your accounts multiple times before you learn risk management. I'm going to leave a link to this article from Cointelegraph in the description box below. This explains one reason why you should consider not day trading extremely volatile markets, buying and holding for the long term. Find when prices are at a relative low, buy, hold for several years, at least 5 years, and sell when prices are relatively high. If you had done that with Bitcoin back in 2010 when it was under $1, at the earliest opportunity you could have identified it was a market that exhibited exponential growth, and then it had an exponential growth curve followed by a deep crash and prices were relatively low. If you'd bought then and you'd sold in December 2017 when I identified that major high and called for a bear market, which happened and it lasted a year. On that date, price closed, I think it was 14,800 something on the day I identified that high. If you'd sold then, you could have turned $100 into over 5 million. That's how you can make multi-generational wealth in these markets, not by day trading and losing your account, but by buying and holding for several years. That's my approach to these markets, and I'm going to walk you through it as I do it. I expect from my own point of view that this is likely a back test of support, and because I'm not day trading these markets, I'm investing for the long term, and all of my investments back from 2019, 2020 remain comfortably positive. I am not concerned at all about this pullback. I will expect this trend line to provide support until it gives way. If it gives way, then the next area of support will be 24,800. For now, this looks like a typical backtest of support, and when it's done, I'll expect price to move up and away. Price doesn't move in a straight line. If it can break above 29,000, we may have another pullback or consolidation, about 29,750. If it can close above that, next area of resistance would be 31,000. Price is falling with overall an increase in volume, although for the last completed session yesterday, we saw a drop in volume. I said I expected that may be the end of downward movement because that's a typical look for the end of a downward movement. An increase in volume on the final session, a decline in volume. Doesn't always work like that. Here, the final session showed an increase, and now it hasn't worked like that again. It works more often than not, but it doesn't work all the time. This is a balance of probability, not certainty. Today, a little bit of an increase in volume pushing price lower, but it is still lighter than the 8th of October. So overall, it looks like there's a decline in volume as price is falling over the last couple of sessions. ADX is declining. There's no longer a clear trend. Stochastics is neutral and heading lower. Using a model of stochastics plus support and resistance, we would expect price to keep falling. But again, look out for support at that red trend line. Expect it's going to hold until it's given way. What's most likely is price is going to bounce up off support here. If it closes below that trend line, then expect price to fall further to next support, which would be about 24,800. The main Elliott Wave count for Ethereum, I am changing the labeling today of minute wave 2, and this is a much more likely and more common expanded flat for A, zigzag for B, and now a 5-wave structure down for C. 1, 2, 3, 4, 5, and 5 has moved slightly beyond the end of 3, avoiding a truncation. For Ethereum, for this Elliott Wave count, there's very little room for it to move into. Minute 2 may not move beyond the start of 1 below 1531.48. Again, I will expect that invalidation point is most likely to hold until it gives way. And if it gives way, I will expect next support below for Ethereum about 1380. This blue channel is containing this pullback for Ethereum down to the low of the 11th of September, which I still expect is quite likely to remain intact. So far, it does remain intact, and this is a deep pullback, which is absolutely very normal behavior for these cryptocurrencies. Pullbacks in the area of 80 to 90+% are normal to be expected behavior. These markets have extreme volatility, which is why they are so risky for day trading. For Ethereum, I'm just going to go over the reasons again why I expect the 11th of September is likely to remain intact. At this low, we have a bullish candlestick reversal pattern, a piercing pattern. This downward movement is contained by a channel which is breached, and we've got backtest of support with price now moving back into the channel, but only by a little bit, and support now holding at 1550. This trend line is not perfectly showing us where price is finding support, but it's close enough. Let's adjust it to sit across these highs and see what that looks like. So that may be a better way to draw the channel now, sitting across these highs almost and across these highs up here. At the low of 11th of September, the piercing pattern does not have support from volume, but we do see some push from volume as price starts to move up off that low. That's good for a bullish case. At that low, RSI had reached fairly deeply oversold, and then at the low of the 11th of September it exhibited double bullish divergence after reaching oversold. This is a very strong bullish look. When we look back at previous sustained lows, we don't see this deep oversold and bullish divergence always. So to see it here adds a little bit more confidence that the 11th of September is most likely to remain intact. Not certainly, most likely. RSI reached very extreme at the daily time frame. We don't always see this at the end of bear markets. Again, this adds to the bullish look at the low of the 11th of September. Money flow also reached oversold and exhibited double bullish divergence. Today, this session is very, very close to the low of the 11th of September. This is normal behavior for these markets to have deep, deep pullbacks in the 80 to 90+% range. So far, this pullback for minute wave 2 is 88.3% of minute wave 1, so absolutely definitely within that normal to be expected range. The Elliott Wave count for XRP remains the same. I still see minor 1, minor 2, minute 1, minute 2. If this low is taken out, then I will label my minor wave 2 an expanded flat correction, and that is absolutely possible. And minor 2, if it continues, may not move beyond the start of 1 below 0.4456. I will leave the invalidation point down there. My invalidation points represent risk for the very short term. XRP now breaking below support at 0.4875. Look out for next support at 0.46 if it gets down that low. This pink channel contains this bear market for XRP. Price has broken through and it's moved up and away. It's been moving sideways with resistance at 55 cents. We had support at 0.4875. So far today that's given way, so look for next support now at 0.46. Overall, this again is normal expected behaviour. These markets commonly have pullbacks that are 80 to 90+%, and this is absolutely within that normal range. Volume overall pushing price lower, but stronger than the 6th and the 7th of October, weaker than the 8th of October, so essentially flat as price moves lower. ADX indicates there's no clear trend. Stochastics is heading lower toward oversold. Price is heading lower towards support. So expect stochastics to get closer to oversold. Price may fall further towards support before this pullback is finally over and the upward trend resumes. In conclusion, keep your eye on the bigger picture. This small downward movement today, given the larger context of this overall upward trend, when you look at the entire price history of Bitcoin, is a small movement that is absolutely within normal expectations, normal behaviour for this market. Overall, the upward trend for Bitcoin remains intact. There remains a series of higher highs, there remains a series of higher lows. In order for that basic pattern to be broken, we would need to see a lower low below the February 2020 4106.98. That would break the series of higher highs and higher lows. It can't be October 2022. It has to be the previous low before the all-time high, which is this one back here in February 2020. While that remains intact, the larger upward trend for Bitcoin, we should assume, remains the same. And the general idea is to buy around about one of these lows and sell around about one of these highs. That's how you make money, and if you want to do it that way, you need to have patience and dedication and have a plan and stick to it. And that's what I'm doing, and I'm going to talk you through it as I do it over the following years. That's it from me with your Bitcoin, Ethereum, XRP. I hope everyone's having a lovely day.